All right, and welcome back to another case study. As you know, we're continuing with this series within these dates. There was a bank holiday the day before this in this period of time, so there was a bank holiday. So now I'm just going to the next day. So I just want to say I'm a developing student. And these are just my interpretations on price, and then big thanks to ICT. Let's get right into it. So as we can see here on the daily chart, what is order flow currently? Order flow is currently bullish. We have come back down to a hourly or a daily fair value gap, and now we can possibly frame an IRL to ERL trade setup. We're coming back down in internal range liquidity, and now we're seeing if we can possibly get a ERL market maker buy model, which is what exactly I'm anticipating this to become. As you can see right here, we come back down to an area of fair value. We come back down to this order block right here, this 4-hour order block on NASDAQ. We reprice that to the tick. Now we're coming back up. We have changed our state of delivery, and now we have had some true displacement. So I'm anticipating the draw on liquidity to be these low resistance liquidity signatures that we have to the upside. If we look on the hourly chart, this is the hourly chart of the NASDAQ. So if you want to mark down your annotations of this, I would recommend doing so. Before I get into it, we're going to go over this day and this expansion that we had within the market. So we look at NASDAQ on the left compared to ES on the right. As we can see here, we have clear SMT divergence at these lows. NASDAQ ends up taking these lows, and ES fails to take these lows. That tells us that we have SMT. We're likely to expand higher. I do want to point out these relative equal clean highs that we have here, that we barely purged this high on ES, but we know the market's likely going to have a more significant purge on price, which is why I would rather trade ES in this situation, because we have the SMT at the lows and we have a clear draw on liquidity. If we look at NASDAQ, it's a little bit less obvious. Like, we have this big wick here, and then we have these highs here. I would elect to trade ES if I were in this situation, which is why I kind of refer to ES a lot more than NQ. And here's that NASDAQ 1 hour chart. So right here, we have a 1 hour imbalance that we end up holding. And then we have a Judah swing within the market within the morning, forming that SMT right here. Boom, SMT right within that order block. Look at this order block, the last big down close candle within price. And look at the respect to this. Pretty much all of these candles are respecting this order block right here. And then we get that big displacement higher. And here's what ES looks like. I have that hourly fair value gap noted. That's what we end up having, the first initial move lower. And then ES's order block gets held perfectly as well. Like, look at the bodies within here. Look at the bodies holding that perfectly. And then where do we come up? We displace to this buy side liquidity. We have a more meaningful purge on liquidity here. And here's what the 5-minute chart looks like. I didn't have a blank chart, but basically we end up forming SMT within the market. We have that initial sell-off at market open. We end up displacing lower to the hourly hourly order block, and then we start consolidating for a little bit. We don't meaningfully displace within that 950 macro, which is what I personally would expect to see. So we don't really displace yet. And then we wait until 1050, I believe, to then start this move higher. So this is, in terms of me looking for a classic buy day, I would be looking for expansion at that 950 macro, and then 10 o'clock to really start that displacement. But as you see here, we end up consolidating. We don't really truly displace higher, and we just end up staying stagnant until we form an SMT within the market. ES draws these lows, and as we see, NQ at the time forms a bullish SMT here. ES liquidates these lows, and then we end up expanding higher. So it's kind of interesting the fact that in terms of relative strength, NASDAQ formed this SMT here, but then formed a more bullish SMT on the 5-minute time frame. And here is the S&P 1-minute chart, and then here is that delivery and price right here. As you see, market opens right here. We end up getting that nice fair value gap right here. Boom, fair value gap here. That could be a possible entry that you have just to look for low resistance liquidity. I don't really mark that. I didn't really denote that in the 1-minute chart, but that is exactly what you're kind of looking for at market open. Boom, we get that fair value gap right here. Boom, fair value gap. Boom, right here. And then this is when we end up hitting our higher time for draw on liquidity. And we're just waiting. We're just waiting. I would like to see a more meaningful SMT. So I'm going to wait, and I'm just going to see what ends up happening. So right here, we put in smooth edges within the market. I want to see a more meaningful purge on liquidity here before I really look to get active. So right here, this 950 macro, I'm probably just gonna wait because I know that we're likely not gonna put in a low within the market at this meaningful level with these equal lows right here. We're likely not going to do that. So you end up waiting. Say you did end up looking at this, engaging this within the 950 macro. You end up looking at this for value gap. Say, oh, I want to buy here. It's cool. Your stop loss will be here, and then you will look for higher targets. That stop loss never gets taken. So you just got to submit to time, and you got to submit to that bias right here. But if you were to take an entry here, you technically wouldn't have been invalidated. But then this 950 to 1010 macro just consolidates. So that means that the move is likely going to start after 1010. But what do we have to do right here? What do we have to do right here before 1010? We have to manipulate lower. We have to create this SMT. That's what the market really wants to do. We want to form this SMT right here to inform smart money traders that we are likely going to expand higher. What do you have doing? Fair value gap in, fair value gap in, fair value gap out. This now becomes a balanced price range. We don't expect that to hold. And I don't know if I'd ever mark this out, but I never really did, but these lines right here, ooh, that's bad look on my end. My bad, y'all. Oops, I'm just going through the slideshow now. But these lines right here is a 5-minute fair value gap that we end up holding perfectly. So these two lines right here, 5-minute fair value gap gets respected. Although the 1-minute bodies are going outside the lines, the 5-minute bodies are still within that fair value gap. That's what we end up respecting. Displacement higher, boom. And yeah, we're gonna go over my annotations of this. So right here, SMT gets confirmed, and then this is the 1050 mark right here to 1110. That's your macro. We come back in, order block gets respected perfectly, and then we end up having this propulsion block. Once this propulsion block gets confirmed, that's when we have our nice run on these highs right here. This is your nice little bread and butter, and then we also have that external draw on liquidity. We have that, sorry, not external. We have that higher time frame draw on liquidity up here as well. So right here, order block, propulsion block, and then we have this mitigation linked with this fair value gap. Boom, right there. That could be your entry. Say you didn't get entered right here. We don't expect a price to head any lower because this is now a balanced price range. Sell side, buy side offered. Boom, fair value gap right within that mitigation, and then we end up drawing towards that draw on liquidity. And here is also the 15-minute chart. This is throughout the day. Notice how we took buy-side liquidity here, and we're still displacing. So the fact that the market is still displacing after we took the buy-side liquidity tells me that we likely want to see higher prices and that we're likely going to see this draw on liquidity. And notice what we end up doing here. We end up engineering a high right before that draw on liquidity. We end up then retracing into a higher time PD array, and we end up forming what? What do we end up forming right here? We end up forming SMT right here in that PD array. So SMT within that PD array after engineering buy side right above that, right above this buy side liquidity level tells us that the probabilities are likely in our favor. And notice what time is this occurring at? 2 p.m. to 3 p.m. Silver bullet hour. So you have all those favors. You have all those odds in your favor now. And here's the 1 minute time frame. Here is that SMT that gets formed within the market. And here are my sorry, I should have had this slide after this. I'm sorry, I'm new to this, y'all. But basically, I do want to map out this standard deviation. Negative 3.5 lines up perfectly with that high. This is that last manipulation move. Boom, negative 3.5. Perfectly up with that high. And then I also want to draw out these last annotations here. So you have fair value gaps in, fair value gaps out, balanced price range. We don't expect the price to revisit there. Then we end up having this order block gets respected perfectly. Then we have a fair value gap. Boom, that gets respected. Then we have a breaker right here, breaker block right here. Boom, we reaccumulate within there, and then we end up seeing this draw on liquidity, and then we end up meeting -3 to almost that -3.5 standard deviation right there within price. So I would be looking for this buy side liquidity because it maps out with -2 to -2.5. If I were to trade this model, we end up having a nice order block in that fair value gap, and that would have been a nice model. And notice what time this is occurring at, that 2 to 3 p.m. hour, and then it continues and bleeds until 3:30 to 3:45. And yeah, we end up liquidating that draw on liquidity, and this ends up being a nice model. And yeah, that was pretty much all this day was nice Judas at open. In terms of cleanness, it wasn't like the cleanest because we end up consolidating within this 950 macro. So then that 1010 window is likely going to start that move to the upside. But what is pricing to do first? Pricing to manipulate lower, and then we can start that buy model. But yeah, that was this day on price, and we'll see you guys in the next one.